Okay, Josephine, you're back.
Yes, looks like I'm the only one here.
Yeah, you're the only one, but we'll just have to continue like that. So I would advise that you check the previous video and you know that the sensitivity took the time and you can follow up with what you did.
Has it been re-uploaded? Like the one on
The
YouTube
last
doesn't have it.
okay. If you now say you watch that video to the end of like to the you see the ending part, you realize that nobody joined class that day actually.
Okay.
So so I stayed till like almost 6 o'clock before I stopped the class. There's nobody joined. And there was even one particular person that joined and he was not saying anything. So he was just like in the class, but his mind was not there, or something like that.
Okay.
So I think the last class we ended at resignation of auditors. So I'll be sharing my screen now.
Okay.
Can you see it?
Yes, I can.
So I'll be moving to resignation of auditors was the last thing we talked about. So now I'll be moving to eligibility to act as an external officer, right? Chapter 2 already. So, so eligibility to act as an external auditor, there is self-regulation by the audit profession. So, eligibility to act as an external auditor is usually determined by membership of an appropriate regulatory body, such as Ican. So, in Nigeria presently, to to work as an external auditor, one has to be certified by ICANN, not ACC. You know ACC holders cannot. Do you know ACC holders cannot sign financial statements in Nigeria? Are you aware?
They cannot do what?
They can't sign financial statements in Nigeria. Audited financial statements. They can't.
Okay, I didn't know.
So it's strictly for ICANN holders. So if you see, I can give you like if you check any group, like if you go online and check any company's financial statement. Let me give you a good example. It should be like all this and any company in Nigeria that is that a good example. If you check their financial statement, an indigenous company in Nigeria, like check their audited financial statement, and if you check the auditor's reports, you will see the seal, like a seal showing the icon, an icon seal. But let me just quickly see if I can show you another set of financial statement. So I want to show you what I'm showing you. So at
Okay.
least we know that what we are doing, we are having practical what we are doing. So I'm coming. We're almost there. I'm firing up my other laptop so that my work laptop actually, so that I can check the financial statements. There's one particular one I have on my other laptop.
All right.
This exercise on patience. You always on the video. Let me just check my companies up because I couldn't fire my laptop up. So I'm going online on my section. Very good. So 2023 was by Deloitte for UK. So presently now, even presently is EY that audits our financial statements. But if I can see Deloitte, I can see EY. So I'm looking for the part where I will see the Ican say.
Sorry, in relation to what you just said, is
Hmm.
it annually that a company changes their external auditors?
Okay, concerning that, okay, because we talked about that in the last class. So for auditors, um, every year they are appointed by the you see it's okay, let me show you. So every company shall at each annual general meeting appoint an auditor or auditors to audit the financial statements of the company. And the auditors, the duration of an auditor is from the annual general meeting where he was appointed to the next annual general meeting. So it now depends on if, so you can see these 3 points here. Is at any annual general meeting, a retiring auditor, however appointed, shall be reappointed without any resolution being passed unless there is not qualified for the appointment. A special resolution has been passed at that meeting appointing some other person instead of him, or providing expressly that he shall not be appointed, or he has given the company notice in writing of his unwillingness to be appointed. So those are the situations where an auditor will not continue next year. So hope you understand that.
Okay, so this change everywhere, but they can also reappoint the same person every year, right?
Yes, yes.
Okay, thank.
Okay. So I'll be sharing you my screen now. I'll be showing you my screen to show you that your military body for audits now. So I'll be sharing. Okay, let me see. So I need to show you. So this is UBA PLCs. This is UBA PLC. You see that by EY, audited by EY. So can you see? Can you see this seal?
No, no, no,
Can you see it? Can you see it now?
not yet.
I'm sharing it. Let me stop presenting and share it with you. Can you see it now?
I can't though. I can't.
Maybe it's on your phone because I'm already sharing it. I stopped sharing and I'll share it again.
I can see it now.
You can see it now, good. Can you see the icon? Can you see the icon? See? So only a member of ICAN can actually sign a financial statement, audited financial statement. So can you see? So if you see from here, you can see FRC. And this ICAN member must be certified by this FRC. This FRC is Financial Reporting Council. Can you see? And this is the seal here at the right side. This seal. So that is by the way. So let us just continue our class.
Okay.
So so back to eligibility. So you must have membership of an appropriate regulatory body such as ICAN, and the role of such regulatory bodies normally include the following. One, offering professional qualification for auditors to provide evidence that auditors possess a minimum level of technical competence. So even after becoming an accountant, a chartered accountant, you cannot just automatically become an auditor. You have to practice for some years or undergo through training for some years before you are given to practice as an auditor. Another one is establishing another rule of the regulatory body is also include establishing procedures to ensure that the professional competence of auditors is maintained. You know what professional competence is? So Josephine, what do you think professional competence is? What does professional competence mean to you?
Professional competence, right?
Yes.
Okay, professional competence is like having the capacity, the knowledge to be able to deliver a job with um, relevant compliance. Like there shouldn't be any form of knowledge gap in doing your duties.
Mm, perfect. So professional competence is having the ability to combine your skills, your knowledge, your experience to carry your work efficiently and professionally. That is what professional competence is. So establishing procedures to ensure that the professional competence of auditors is maintained. This includes matters such as ensuring that audits are performed only by fit and proper persons who act with professional integrity. So audits will not be performed by somebody who is not an auditor or who is not certified to be an auditor. So requiring that members carry out their audits work in accordance with appropriate technical standards. For example, in accordance with international standards of auditing. So ensuring that this audit statements, so ensuring that these members carry out their audits work in accordance with the applicable international standard auditing standard, which is ISAS, International Standards for Auditing. Then also ensuring that auditors remain technically competent and up to date with modern audit practice. For example, by following a program of continuing professional development. So this is ensuring that auditors keep up to date. Like, there will be new regulations, there will be new standards. Just like your IFRS now, that there is now IFRS 18, which is going to replace, I think, IFRS 18 will replace IFRS 1 to many company. But I think it's starting from next year, I think January. So it will be okay. It's not even next year. It will be effective from 1st January 2027. IFRS 18 will replace IAS 1. So these standards we keep like these standards we keep updating them because business is dynamic, the world is dynamic, the world has to move on. We have to unlearn some things. There's a quote by one man who says, in the 21st century, I think he says in the 21st century, the the illiterate will not be the one who can read or write, it will be the one who cannot unlearn, learn and relearn, I think. So I don't know. Have you heard that quote before? Josephine? Josephine, are you on the line?
Yes, yes.
Okay, let me look for the full quote. Full quote. The issue is not one who cannot. So yes, it's the quote is from Alvin Toffler, and it says the literates of okay. Will be my own network too. Josephine, can you hear me? Like now, can you hear me? Okay, okay.
Yes, I can hear you.
So
I can
okay,
hear you.
so the quote is by Alvin Toffler, who says the literate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn, and relearn. So, so another one is providing procedures for monitoring and ensuring compliance by its members with the rules of the regulatory body. This includes rules and procedures for the investigation of complaints against members and the implementation of disciplinary procedures where appropriate. They are also maintaining a list of registered auditors, which is made available to the public. Such a system is referred to as a system of self-regulation. In such a system, the regulation of auditors is carried out by their own professional bodies. So we have regulation by government. The alternative is regulation by government. The government may appoint a public body with similar responsibilities to a self-regulating professional body. The public body will therefore establish rules and procedures for approving or authorizing individuals to perform audit work, also for ensuring that authorized auditors have the necessary minimum skills and knowledge to carry out their work to a proper standard, and to for handling complaints and taking disciplinary measures against auditors where appropriate. In addition, institutions for statistics law to establish that certain individuals are ineligible to act as an external auditor in the context of a given company, even if they are a member of an appropriate regulatory body. These exclusions are designed to help establish the independence of the auditor. So, according to Section 403 of CAMA 2020, the following individuals are prohibited by Nigerian law from acting as the auditor of a company. Number one is an officer or servant of the company. So, Josephine, why do you think this one is not that hard? So, why do you think an officer or servant of the company is prevented from acting, is prohibited from acting, is prohibited by Nigerian law to act as an auditor of the company? So, this one should be simple. So, at least from your knowledge of audits that you've done in previous classes, you should be able to answer this. So why is an officer or servant of the country not allowed?
Um, According to should I say the standards, it's only um the shareholders would need to hire someone to do the external audit for them. So it has to be someone outside of the company because they are trying to get a level of assurance
Okay.
and the integrity, objectivity, and every other code of ethics has to be in place. So if it's someone from the company, there might be a breach to the objectivity code of ethic.
Very good. So if you remember the IS back code of ethics, is all those IS back code of ethics should be like they should be like you should know them every time. You can use the acronym PCOP. That's what I use when I prepare for my exams. I was like PCOP, P for professional competence and behavior, I for integrity, C for confidentiality, O for objectivity, then P, the last P for professional behavior, professional competence and behavior, integrity, confidentiality, objectivity, professional behavior. So when an officer that is inside that company, they're telling that officer, servant in that company, come out of this company. There is no level of independence. There's no level of independence. And you know that an audit is an independent review of the financial statements. So if there is no independence by the auditor that is already that knows what is going on in the company, auditor will be able to do a lot of interesting. I will, I will, I will prepare the audit report according to his view. So an officer of servants of the company is not prohibited. So the second one here is a person who is a partner or in the employment of an officer or servant of the company. I know we did related party. I think I don't know. I think you will get there, or probably you remember we did something like related parties. So people in related parties too. A person who is a partner. This is a related party. A partner. Same thing with an officer or servant of the company. They are related parties, and they should not be involved in the audit engagement. So, and the last one here is a body corporate. But I want to ask you this question. Should the people EY, PwC, Deloitte, should be their companies? And we say that according to this section 403 of Tama 2020, why do we say, but why is it that EY, to be those EY, Deloitte, PwC, the Big Four, and all those audit firms, to be their companies? But why are they auditing? Why are they able to audit companies? So I want you to answer that question. Like, why do you think all these them EY, Deloitte, KPMG are able to audit companies?
I don't know, maybe because they've already been established as a professional body doing that to perform the audits for various companies. I don't really have any idea.
So, so I'll give you the answer now. So, have you noticed that when you get to a particular when you get to a particular stage, like if you work in one of the people, when you get to a particular stage, same thing with law firms. When you get to a particular stage, like high, high of the like higher of the like when you get to a high point of the hierarchy, they call you a partner. Why do they call you a partner? Can you just have you thought about it, Josephine? I want you to be able to.
Not because of the hierarchy they've attained or something.
Okay. So the thing about Ernest and Young is all these Ernest and Young, PwC, EY, they are not actually companies. They look like they are companies, but they are not companies. They are structured as partnerships. Do you get? Now, the reason why a company, do you know the reason why a company cannot audit and audit them? You know, we will get to a part where we are going to do auditors liability. And now, you know, the difference between a limited liability company and a partnership is for a limited liability, we understand that the liability of the owners is limited to the amount that they have contributed into that business. Any of their liability does not go beyond how much they contributed into that business. Do you understand that part? Josephine, I want you to follow. Do you understand that part now?
No, 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 no.
What I am saying is the reason why a body corporate is not allowed, a corporate body is not allowed, is because a company, the liability of the owners of that company is only limited to the amount that they've contributed. Auditors are expected for you to carry an audit engagement. Auditors have a liability to that engagement because this audited financial statements that their shareholders or their stakeholders will rely on. So if the auditor has done a wrong thing, they will be liable. Hope you know, they will be liable to the professional judgment they've given. If they've given a wrong professional judgment, they'll be liable to it. So if they want to sue the auditor, who will they be able to sue when the auditors, when it is a company? We can't really sue a company. You get that kind of stuff. You get what I mean now? You can't really sue them
Yes.
because their liability is limited. If it is a company, you can't sue a company because their liability will be limited to how much they've contributed to that business. So audit firms are not they are not companies, like they are not structured as limited liability companies. They are structured as partnerships. You get. So
Yes.
they are not commercial companies. They are professional practice firms. So you get.
Yeah.
So
I
hope you
understand.
understand you understand this now. I'll explain it better now. In Nigeria, we don't allow a limited liability company under companies law cannot act as an auditor. And this is because an auditor must be independent and personally accountable. But you know that for a company has a separate legal person. It's a separate legal entity. You get. So if you are going to sue a company, you are not. It's just like UBA now. If you want to sue UBA, you can't sue to Lumini. You get. UBA and Tony Lumini, they are two different people. Although Tony Lumini is the like highest shareholder of UBA. But if you are going to sue UBA, it's UBA you will sue. And if UBA has any liability, UBA itself will pay that person for the liability. So all these Ernest and Young, all
Okay.
this PwC, all these Deloitte, they are not companies. They are not companies. They are not limited liability companies. They are more partnerships or limited liability partnerships. So so that's why when you get to like the top of the hierarchy in a audit firm or a law firm, you get they give you the name partner, you get. So I don't know if you are conversant with LinkedIn,
Okay.
you see some people when they've gotten to that high hierarchy, they call them partners of that company. So so moving on. So a person does not qualify for appointment as an auditor if a comp of as an auditor of the company if he is one a debtor to the company or a subsidiary in an amount exceeding 500,000 naira. If he has shareholders, if if he is a shareholder or spouse of one of their major stakeholders, if a person who has an interest in the keeping of the register of holders of debentures of the company, and also an employee of a consultant to the company who has been engaged for more than 1 year in the maintenance or preparation or any of any of his financial statements or records. All this is just kind of talking about related parties. Related parties based on their relation to the shareholders of this company or consultants of the company. Or this one that is this debtors, debtor of the subsidiaries are not. This can affect the auditors. Uh, this affect the auditors' independence. And we are going to get to that part where we will see the threats to an auditor's independence. You see, there's familiarity threats, there's intimidation threats. You see, that familiarity threat is mostly when the auditor is collecting gifts or they gave him things on credits, those kind of stuff. So we will still get there. It's also in this chapter. So we're moving on. What are the rights and duties of auditors? So before I go back, I want you to give me, what do you think are the rights and duties of an auditor? So you can just mention like two or three. Okay, let's start with rights, rather. So what do you think are the rights? Just say one or 2 points.
Unrestricted access to financial information necessary for the audit, and unrestricted access to persons, in maybe conducting audit evidence, you may need persons or anything relating to persons to confirm your audit
Yes,
evidence. You should have the
yes,
access and the financial
right.
information to support the audit.
Thank you so much, Josephine. You are in the right track. So okay, these people started with duties. I would have preferred to start with rights before duties. But let us look at the duties first. So the duties of the external auditor are, the primary duty of the external auditor is to examine the financial statements and to issue an auditor's report on the financial statement, which is then presented to the shareholders together with the financial statement. This is the primary duty, like these two. Examine the financial statement and give an auditor's report that, okay, this financial statement should show a true and fair view. Let me give you, so let us not, so the way we are doing practical, let us look at this financial, let us look at this audited financial statement. So I will go and I will look from I will look from where I will look for where this auditor's opinion is in this financial statement. So I'll be sharing my screen now. So can you see my screen? Can you see this opinion?
I can't see it. So
Can you see? Can you see it now? Can you see it now? Can you see EY? Can you see the slide on EY? Hello, Josephine, can you see? Josephine, can you see the slides? Okay. So if you see the slides, you see EY, logo, independent auditors report to the members of United Bank for Africa, reports on the audits of the consolidated and separate financial statements. So this is their opinion. We have audited the consolidated and separate financial statements of United Bank for Africa PLC and its subsidiaries together with the group, each comprised of the consolidated and separate statements of financial position as at 30th, at 31st December 2023, and the consolidated and separate statement of profit or loss and other comprehensive income, the consolidated and separate statements of changes in equity, and the consolidated and separate statements of cash flows for the year ended, and the notes to the consolidated and separate financial statements, including material accounting policy information. So the auditor's opinion is coming down. In our opinion, the accompanying consolidated and separate financial statements give a true and fair view of the consolidated and separate financial position of the company at the bank as at 31 December 2023, and its consolidated and separate financial performance and consolidated and separate cash flows for the year then ended, in accordance with International Financial Reporting Standards. The provisions of the Companies and Allied Matters Act 2020, Banks and Other Financial Institutions Act 2020, the Central Bank of Nigeria circulars are in compliance with the Financial Reporting Council of Nigeria Amendment Act 2022. So that is a good example of an auditor's opinion. So I'll be going back to my slide. Going back to the PDF. So can you see the PDF now?
It keeps going and coming like sharing is not stable.
Is it your network?
I think it is.
I think you think it's mine.
I think it's my network. I don't really know.
Okay. I'm not sure. Me
There's
too.
an
I might
option
not be
when you
sure if
click
it's my own
on
network. So,
more and then it goes off.
because I'm trying to even hear you. I'm trying so hard to hear you. But hope you can see the screen now. Like hope you can see the PDF.
I can't see it there, but let's just continue. I think it will come up.
Okay, so come on. Okay, so I've seen the auditor's reports. Then okay, so like how we saw it in the UBA's audited financial statement, we saw the auditors, this auditor's report to set out the auditor's opinion as to whether or not the financial statement give a true or fair view or presents fairly the financial position and performance of the company as we prepared in accordance with the applicable financial reporting framework. In Nigeria, Section 404 of CAMA 2020 requires the auditor to also form an opinion on matters stated in Schedule 5 to CAMA 2020 as provided below. Whether they have obtained, also, the auditor's report will also show whether they have obtained all the information and explanations to which to the best of their knowledge and belief were necessary for the purpose of their audit. And also whether in their opinion, proper books of accounts are being kept by the company, so far as appears from their examination of those books, and proper returns adequate for purposes of their audit have been received from branches not visited by them. And also whether the company statement of financial position, and unless it is framed as a consolidated profit and loss account dealt with by the report agree with the books of accounts and returns, whether in their opinion as to the best of their information and according to the explanations given them. The said statements give the information required by the Act in the manner so required and give a true and fair view. In the case of the statement of financial position of the state of the company's affairs as at the end of at the end of its year, for EBAs of 2023, and we look at. In the case of statement of profit or loss account, of the profits or loss for its year, or as the case may be, give a true and fair view thereof, subject to the non-disclosure of any matters to be indicated in the report, which by virtue of part 1 of the first schedule of the Act are not required to be disclosed. In the case of a holding company submitting group financial statement, whether in their opinion, group financial statements have been properly prepared in accordance with the provisions of this Act, so as to give a true and fair view of the state of affairs and profits or loss of the company and the subsidiaries and associates. The auditor's report must state if any of the above were not met. The outcome of the statutory audit is an opinion on the truth and fairness of the financial statements. The word opinion implies that the auditor has applied his professional judgment to reaching his conclusion. This point is arguably one of the limitations of the statutory audit. The audit report expresses an opinion, not a statement of facts. It is therefore open to disagreement. So, Josephine, why do you think this statement, why do you think an auditor's opinion is a limitation of the statutory audit, that the audit report expresses an opinion? Why do you think an audit report expresses an opinion and not a statement of facts? Besides, we have checked the financial statement and seen that the financial statement show a true and fair. Now, why do we say it is expresses an opinion and not a statement of facts? In your own idea or your knowledge of all this, why do you think this statement is like that? Okay, so I will explain it this way. In performing an audit, we will still get to where we are going to do audit sampling and a lot of things. They can never, one thing about performing an audit is they can never be 100% checks. Like, it can be 99.9999999, but they can never be 100% checks. So an auditor can only make an opinion, but it is not a statement of fact. And that his opinion be can be challenged, because it's not a 99.9%, and it's not a 100% assurance. It's like it can be high, it can be almost 100%. It can never be 100%. So let's continue. In carrying out his audit work, the auditor is unlikely to check every transaction undertaken by the company during the period. There is therefore a risk that the judgment he forms may be inappropriate, because in performing the audit, he has missed an item of significance. So let us read that statement again. He said, in carrying out his audit work, the auditor is unlikely to check every transaction undertaken by the company during this period. And let's look at it. UBA, no matter how, okay, let's just use UBA as an example. UBA is a multinational bank. It's a multinational bank. It's a one bank in Nigeria. Only in Lagos. I can say, because I work in LMP. In that Lagos, I know, like, I can't, the branches that are even inside that marina, the branches there are like 3 or 4. Not to even talk about branches in the whole of Marina. Let's not even talk about Lekki. Let's not talk about your other branches. Not that is just only in Lagos. The number of branches that UBA has only in Lagos. Not to talk of Ogun States, not to talk of Lagos States, not to talk of. So it is just almost impossible for the auditor to check every transaction. That's why they always do sampling. They make use of sampling techniques and all those kind of techniques. There is no way the auditor can make 100, like check everything. It's not just possible. So the auditor is unlikely to check every transaction undertaken by the company during the period. There is therefore a risk. So there's a risk that the judgment informs will be inappropriate because in performing the audit, he has missed an item of significance. So we'll move to rights of the external auditor. So external auditors have certain statutory rights to enable them to perform their statutory duties. The main statutory rights of the auditor per CAMA 2020 at section 407 and 410 include the following. And you said some of them already. So you said rights of access to all accounting books and records at all times. It makes no sense. An auditor comes and you want to audit your friend and they are not providing the financial statement. What do I want to audit without the financial statement, without your accounting books? Okay, then the rights to all information and explanations from management necessary for the proper conduct of the audit. Information, other information like when last did. Okay, a good example is like, let me look at my card now. I'll say information like how much like receipts of, let's say they built a new branch, like UBA built a new branch. What was the cost incurred building the new branch? Other information like that. Then also the right to receive notice of all meetings of the shareholder, such as annual general meeting, and to attend those meetings. Then also the right to speak at shareholders meetings on matters affecting the audit or the auditor. This can be important when the auditors disagree with the directors of the client entity and are unable to communicate with the shareholders effectively by any other method. Then, if the company uses written resolutions, the auditor should have a right to receive a copy of such regulation, to receive a copy of all such resolutions. So there's responsibilities of management and those charged with compliance. So I want to ask you a question. What is corporate governance? What do you understand by corporate governance? Think the freelance today. Oh, Okay, Josephine, you're back. Hope you can hear me now. Hello, Josephine. Hope your network is allowing you to hear me now. Hello, Josephine. Hello, Josephine. Can you hear me? Sorry, I can't hear you. Okay, okay, okay. Fine. So I asked the question before you left. The question is, what do you understand by corporate governance? At least from your CSMB, what do you understand by
So,
corporate governance?
how a company builds its internal control.
Because I can't hear you well, but maybe you can type your response on the chat box so I can hear you because to be honest, I can't really hear you. Maybe look back, so I'll type it that way. So Josephine, I'm waiting for your response on the chat box. Since I can't hear you. Or maybe you can go to a place where I'll be able to hear you. So what you understand by corporate governance? Huh? Yes, okay. Josephine, which network are you using? Hope it's not blue. Eh? Sorry, I didn't hear you, bro. Or should we chat maybe you should chat on the comment box, like just comment. I think that would be easier for you. You can just chat. Oh, your daughter got invested. So what do you understand by corporate governance? Either you mute, maybe you're mute at top, or you type of the comment section. I just want to ensure that at least I know that you're in class. You're not just teaching and I'm not carrying any module around. If not, I'm comfortable cross teaching. And since I need to be uploaded, since I need it to be uploaded on YouTube, I'm fine with that, but at least I need to ensure that people are in class, they are getting instead of teaching, not me just talking. Because the other should anybody can take this ethics and insurance program. So please just unmute and speak or type in the comment section. So I will know what do you understand by corporate governance. Yes, you are right. Corporate governance will lead to control. But what corporate governance actually means is the way in which companies are managed, the way and manner in which companies are managed and functioned. What is our leadership structure like? What is the management like? So I know companies they always have they will have not to be executive director, not executive director. So the way the company is structured, the way the company is managed, the way the company is called. But we are going to get there, even in this chapter, I think. Let's just move on. So, so where we got to is responsibilities of management and tools to new governance. So, with respect to the audit and contrary to what members of the public think, it is the management and those charged with governance who are responsible for prevention and prevention of fraud. So, this is very, this is a very, this is something that a lot of people think. They think that auditors are responsible for prevention and protection of fraud. Auditors are not responsible for prevention and protection of fraud. Their own is to give, even if they notice a fraud, even if they notice fraud, their own is just to give an opinion that there has been some form of fraud, but that it's not their primary duty to prevent and to detect fraud. So, my God, um, management and those charged with governance are also responsible for preparation of financial statements. They are also responsible for design and implementation of effective internal controls. For example, authorizing payment above a certain amount, monthly bank reconciliation, and monthly trade payables, control accounts and reconciliation. They are also responsible for providing the auditor with access to information relevant to the preparation of financial statements, additional information relevant to the audit, unrestricted access to persons whom the auditor needs access to in order to complete the audit. If you look at this rights, these duties of and responsibilities or duties of management and those charges and governance, it's kind of this part of them providing responsible for providing with the auditor. You can just see it is one of the rights of the auditor. If you look at it, it's also if you look at it, they are responsible for providing the auditor with. So we say the auditor has a right of access to information relevant to preparation of financial statement. It's a right to the auditor and a duty by is a right of the auditor to is a right of the auditor and a responsibility and also a responsibility of management and those charged with governance. So another responsibility is providing written representations to the auditor at the end of the auditor, at the end of the audit. So we move to the next part. We say professional regulation. Auditors are required to carry out audits according to professional standards. And professional standard is ISA, also called International Standards of Auditing. It was called NSS in Nigeria before National Standards of Auditing. Some assurance work is also covered by professional standards, although this is a developing area and less guidance is available. In many cases, guidance in giving guidance given in audit standards can be adapted for use in assurance services when there is no specific guidance for that service. And as assurance provision goes increasingly global, the harmonization of such professional guidance has become necessary. So I'm moving to the next topic here, which is the next point here, subtopic, which is harmonization, harmonization of the accountancy and auditing profession. So the International Federation of Accountants is an international regulatory body for the profession, but each country has its own regulatory regime for audits, which may not necessarily apply the same principle of audit behavior as those used by IFA. So, um, yes, something was not to do. Hello, Josephine. Okay, have you been hearing me since? I think I mistakenly muted myself. So, Josephine, can you hear me? So, so I talked about this IFAC and why does and I said that the IFAC is an international regulatory body for the profession, but each country has its own regulatory regime for auditing, which may not necessarily apply the same principles of audit behavior as those used by IFAC. So what do you understand by these statements? I just want this class to be interactive, so at least I know that you are following. So that paragraph, what do you understand by it? What do you understand by that? How can you interpret that paragraph? Hello, Josephine, can you hear me? Just have 9 minutes left. My sister for this class will first. I know you are trying, but being the only one to come to this class and to be able to listen to this class. But just 8 minutes next time. We'll round up today. I don't know. I'll continue tomorrow. Okay. I can see your comments, not sure. Okay. What that statement means is IFAC. IFAC is an international regulatory body. Ican is a member of IFAC. So other countries' professional accounting bodies are also members of IFAC, International Federation of Accountants. But what that statement is saying is that every country has its own regulatory regime. In UK, we have its own regulatory standards for auditing. And the regulatory standards performed by UK will be different from ours. So, same thing with IFAC. The international regulation body, some of their some of their regulations will differ from some of the ones we are using in Nigeria. So, moving on, the same arguments that have been made in favor of the universal adoption of international accounting standards can also be made in respect of other regulatory aspects of the auditing accounting profession. This includes advantages such as the adoption of global auditing standards, which should improve the efficiency of the audit process for multinational companies and should improve transparency in audit reporting. What this is just saying is an advantage of adopting global auditing standards is like UBA now. UBA is a multinational corporation. They have, apart from their branches in Nigeria, they have branches in I think 19 African countries presently, and sorry, countries Europe too, or North America, as it is maybe. I don't really remember. But let's even use Africa as a case study. So just 19 African countries. The IEBA is also operating in like Ghana, Cameroon. Those countries, they also have their own regulations. So, but if on every so it will make it hard for them to prepare financial statements. Like in Nigeria now, we know according to IAS 16 property platform, we recognize assets as okay. Let me look for the one that is easy. IAS 2 inventories. We recognize inventories at lower of cost and or net realizable value. In their own country, like the lower of net realizable value and something else entirely. So the advantage of adopting these global auditing standards is that everybody will going to be using the same standards. Now imagine for us to prepare consolidated financial statement for UBA, it's going to be harder because now this country is using different standards from another country. So we just have to find a way to just consolidate our financial statement, even though different countries, different companies, if our different countries, the way we prepare financial statement for these different countries is different. So an advantage of adopting global accounting standards is we know that the way we treat assets here is the same thing. The way we treat current assets here is the same thing. The same way we treat non-current assets, the way we depreciate our assets is the same, and all those kind of things. So the disadvantage is that the problem of getting international agreement for auditing practice and the need for many countries to change their local law to bring it in line with the agreed international practice. So the disadvantage is that, which is very, very cumbersome, Nigeria, Ghana, Nigeria, all of them have to put their heads together and say we have to prepare our financial statement according to this. And we have to like overlook our local laws. It's going to be very, very cumbersome. So now what I saying is a number of initiatives are taking in place to harmonize regulations auditing profession internationally. And this includes the following. The audits of all listed countries in the European Union should now be carried out in accordance with international standards of auditing. There are also moves to establish a more formal statute-based component governance regime, such as Sarbanes-Oxley in the USA. You can check more about this Sarbanes-Oxley. Then the development of national regulatory models for the profession, headed by a single unified body. The Financial Reporting Council of Nigeria is envisaged to play this unifying role in Nigeria. Then the securities and so The Security and Exchange Commission in the USA is a large established example of a unified body. In the UK, the Financial Reporting Council also has a unified role, and this Financial Reporting Council will set accounting standards, set audit standards, they enforce and monitor compliance with those standards. They also oversees the self-regulatory professional bodies such as ACC, Association of Certified or Chartered Certified Accountants, the IQ, Institute of Chartered Accountants of England and Wales, and Ican. So it has been suggested that stricter regulation from an external authority such as the SEC in Nigeria and the SEC in the US, the FRC, Financial Reporting Council in Nigeria, and the FRC in the UK is needed to balance the increasing global power of the big four professional accounting firms. So tomorrow we look at professional standards and we'll look at the international standard setting process and all. Hopefully we'll finish this. So I will just roll out all the past questions that I have to. So Josephine, thank you so much for coming to this class. And hopefully we hope that not only you come tomorrow. So invite your friends, tell them that you like a lot of people. I'm hoping to see you tomorrow. Thank you very much.
Tomorrow, right?
Hmm?
It's by 7 tomorrow, right?
Yeah, 7 to 9. Yes.
Thank you. Thank you so much.
All right. All right. You're welcome. Have a nice day. All right.